I think what we've seen is pre the invasion, we were at 4 countries that were NATO member states that were doing the 2% of GDP that they commit to do. 2023, that was about 11 member states. 2024, we're expecting us to be about 18 member states. And our work shows that if you get to about 31 member states meeting their obligations, that's about $63 billion of incremental investment that's going to come into Europe. So I think the trend is going to continue, primarily. I think the other thing that we've seen as well is in the last 6 months, that budget increase has really started to hit the backlogs, the P&Ls of the companies that we cover, right? So we do really believe that this is going to be a medium-term growth story here in Europe. The other thing I'd say, I think from a market perspective is, I think if we were having this conversation six months ago, people would have been of the view that this was a 2 to 3 year investment cycle. The reality is we need to rebuild Europe's defences. We need to recapitalise the industrial base, but there's also a lot of replenishment and rebuilding of inventories that is going to need to take place given the support that a lot of the countries in Europe have given to Ukraine. So my view is that this is going to be something that is going to be driving growth through about 2030.
Interesting. You did say in a note that we believe EU defense is a structural growth market through 2030. But my question to you is, could we see that going beyond 2030? Because at this stage, you hear some NATO countries saying that we need to spend 3% of GDP in defense. The geopolitical picture is getting more and more complex. Can this be a story that will go beyond 2030?
So I think what you're going to see in the next 5 years is a lot of focus on projects like land, a lot of things like air defense, right? Companies like Rheinmetall, as an example, companies like Saab, companies like Leonardo. But there's also a big strategic picture beyond 2030, which is things like the AUKUS strategic pact, the UK, the US, and Australia with the nuclear submarine pact. You've got global combat air, where the UK, Japan, and Italy are looking at building and developing a stealth fighter for the next generation. So the short term, there's a lot of focus on land, there's a lot of focus on defence. And the longer term, there's a lot of focus on rebuilding the technology and some of those big strategic objectives around tensions in the Indo-Pacific. It's a big focus for the US, etc. So I think we see a really clear short-term picture of which is rebuilding, recapitalising, but then there's a big reinvestment story in technology and some of those bigger geopolitical pictures for the 2030s.
I'm glad you brought up the question of the United States, because when you compare US defense stocks and European defense stocks, there's clearly more appetite for European stocks at this stage. Why is that? Why are US stocks lagging when it comes to this particular sector?
Yeah, so historically the US defense names were seen as best in class. They generated a lot of cash, the budget was growing significantly, and in Europe, 2011 through to 2016-17, we just had real budget pressure. There just wasn't a huge amount of execution, cash generation wasn't good, so they were just seen as lower quality companies. We had ESG in Europe, which was a big dynamic that maybe we'll get onto. And I think where we see things today is the outlook in Europe is significant growth. The companies are performing well, they're generating cash, they're delivering on margins. I would say if I look at my coverage, average, I think they're going to grow 10% organic through 2030. Some will be above that, some will be below that, but on average, that's a significant amount of growth through to 2030. And in the US, people worry about the outlook for growth. We as a firm believe that budgets are going to continue to grow. We believe the budget environment is going to continue to grow in the US, but it is less certain on the rate of growth than we have in here in Europe. So that's why I think you've seen the derating of the US defence names relative to the market and the continued re-rating of the European defence names relative to the market.
And speaking of ESG, your colleagues at Citi were suggesting that there's a bit of a shift in perspective when looking at the defence names and whether to invest them via the lenses of ESG. I was wondering whether you recognize this shift as well, and when looking at these names, investors are now thinking, well, this is investing for peace.
So I agree with that, right? I do believe that it is the conversations that I have with people as well. Some countries have changed a lot quicker. So Scandinavian countries, in my experience, have changed very, very quickly in terms of their attitude towards defence as an investable universe. There are still some countries and some firms that don't want to invest in defence. There's a lot of focus around things like nuclear, as an example. Some people don't want to invest in nuclear. But I would say, on whole, the environment in Europe has changed quite materially in the last 18, 24 months since the invasion of Ukraine, definitely.